My name is Alex Johnson, and welcome back to our limited series podcast, Fintech in 2025, Where the Industry Goes Next. This series is sponsored by Marqeta, and in episode 1, Marqeta's CEO, Simon Khalaf, and I discussed some of the mega trends that have shaped fintech in 2024, and why those trends are, counterintuitively, reasons for optimism for fintech in 2025. In today's episode, episode 2, we continue with this theme of optimism, and I sit down with Todd Pollak, Marqeta's Chief Revenue Officer, and Matthew Goldman, my friend, founder of Totavii and author of the newsletter Cards for the Win. Now, if you know Todd or Matthew, you can probably guess the topic of our conversation: the state of credit in 2025. In this episode, which we recorded live at Money 2020, we discuss the increasingly competitive credit card market, the evolution of credit cards as both a form factor and a product construct, and strategies for banks and non-bank brands to differentiate their credit products in 2025. It was a really fun conversation, and it left me very excited about the future of credit and credit cards, and I can't wait for you to listen to it. So, without further ado, here is episode 2 of our podcast series, Fintech in 2025. Hello, and welcome to the Fintech Takes Podcast, recorded live from Money 2020. It's a smaller group, but what you lack in size, you make up for in enthusiasm. I appreciate you. We are going to be talking all about credit today. This is State of Credit, and I know a little something about credit. It's a passion of mine, but I am joined by two folks who know a great deal more than I do. So I'm going to let each of them introduce themselves. Matthew Goldman, why don't you go first?
Thanks, Alex. Good morning. I'm Matthew Goldman. I'm the publisher of Cards for the Win, which is a niche industry cards newsletter.
It rules, by the way.
Thank you. And I run a consultancy called Totavii, and we help people build fintech products, especially cards.
I'm Todd Pollak. I am the Chief Revenue Officer here at Marqeta, and I'm excited to talk to you guys today, so thanks.
Excellent. All right, so we are going to get into, as I said, State of Credit. This is somewhat built on a report that Marqeta just released based on some research on the state of credit in the U.S. So we will reference that a little bit as we go. But the first thing I wanted to talk about is, and Matthew, you'll appreciate this question, why credit cards are weird. And the premise of this question is that I think while most financial services products are pretty sticky, pretty relationship driven, maybe to the point of causing a problem in terms of consumers not seeking out better products when they should, credit cards are different. And this is backed up by the research from Marqeta's State of Credit in 2025 report. Even very satisfied credit card users say that they could be convinced to switch. And in fact, people do frequently switch from one top of wallet card to another card. So the consumer behavior, loyalty, motivations that we see in credit card are just different. And I think at a high level, I'd love to get both of your takes on why that is. So Matthew, maybe you can start.
Yeah, I always thought what was amazing about credit cards is that they're not simply a payment tool, right? Like that's how they started. It's a way to get some lending, a way to move some money, but they've turned into identity. Like carrying a Chase Sapphire Reserve says something about you, or if you have the World Wildlife Foundation card, says something about you. And then we become just a nation of points lovers in a way that I never anticipated. Used to just be consultants and business people, and now everyone's talking about it. And so it's just so much more. It's your identity, it's a way to pay, it's all these tools, and then having the best card for you makes you seem smart, and everyone wants to be smart, and everyone's willing to change cards to look smarter.
That's really a very interesting insight. And I mean, given your background and places you've worked in the past, like I suppose the infrastructure that's been built up to help people make the smartest credit card choice sort of plays into that psychology. Is that fair?
Absolutely. I mean, again, like you go back 20 years and there were some bad forums on the internet where people talked about how to maximize their points. And then you have sites like The Points Guy and creditcards.com, and NerdWallet that started publishing really in-depth articles. And then now today we have, AI and tooling and algorithms and recommendations. And so it's getting much more and more personalized and giving people the opportunity to really engage in it and figure out what's like absolutely right for them. Are you spending a lot of money at the vet, or is it at dining, or is it on travel? And how does that work for your lifestyle? They're like 3,000 cards on the market in the United States. So there's a lot of choice.
Well, we're going to talk about the number of choices probably going up even more in the future. Todd, what would you add in terms of why credit cards are just fundamentally different?
Well, I think historically the issue has always been the model hasn't changed dramatically over the last 20, 25 years, right? At the end of the day, everything that Matthew said is true. But when the initial credit card market was launched, you had maybe 5 choices that mattered, maybe 10, right? When you get up to 3,000 choices, everything looks relatively similar.
Yeah.
And so you can say, oh, well, I like this bank and I like this particular reward, but most people don't switch because they feel like the reward they have is either meaningful enough, or they feel like they have a general card that gives them lots of different rewards at lots of places, so they don't have to think about it that much. So it's really, really difficult to break into this market when you have 3,000 options out there that all look relatively the same, all based off of the same economic model, driven by the same 3 banks.
Yeah.
So, what the industry really needs is someone to come in and look at it and say, there's a better way to do this. There's a better way to extend credit to a bunch of people who didn't have access to it before. And traditionally, what's happened is that area of the market has been left unprepared, unserviced. So there's a huge opportunity, I think, to think about revolutionizing the way that credit actually gets managed by banks, by financial institutions.
Yeah, no, I completely agree with that. And it leads to my next question, actually, which is, what is it that consumers value in credit cards? And I think there's one obvious answer, which we can talk about. But I'd also like to get sort of the under the surface answers about other things beyond rewards, perhaps, that also at least different segments of consumers value. But Matthew, maybe you can go first on this one.
Yeah, I think it just depends who the consumer is. Like, that'd be my first response to that question is, who are we talking about? Because there are people who use credit cards for access to credit, who have limited cash flow, and that temporary loan, essentially, right, is a better option than many other things, or maybe the only way they can, in the famous example, get their car fixed. Then there's consumers who never revolve, and it's all about the rewards. And then I think somewhere in between, something that a lot of people love but don't talk about is the consumer protection that cards provide.
Yeah.
People hate having merchant disputes. They hate having a disagreement. They love having their credit card company solve that for them. But some of the things that have accrued to certain brands that have a very pro-consumer approach to disputes and things that, transcends all those user types, which is it's a form of safety, right? It's safer than cash. You can use it online. You can, dispute something with a merchant, or if it didn't get delivered. And I think people really value those benefits.
Just to add one point on that, I have a card with a very large card issuer, and I was delighted to find that when I went in to look at my transactions, I was trying to cancel my New York Times subscription, which they literally make impossible. Like, you cannot get the New York Times to cancel your subscription. It's not going to happen. And so I clicked on the transaction in the app, and they actually presented an option for me to deactivate the card for that recurring charge. And they don't do that for every recurring merchant. I think they have different relationships with different billers, but they were going sort of steps further to save me from the subscription economy. And that was a subtle point of differentiation, but one that definitely mattered to me in that moment. Todd, how about you?
So I think there's different, I want to break it up into 2 things. One is, why does someone sign up for a card versus why does someone use a card?
Oh, no, that's a good distinction. Yeah.
Because what you see is a lot of people, to your point, it's about image. It's about, I want to be a part of this thing. We have a program where, someone launched a mirrored card. It became the biggest, fastest growing program at Marqeta. It's simply because the card itself,
it looked cool.
Looked really cool, and people wanted to be in the exclusive club. Now, whether or not people use that card and it becomes top of wallet is a completely different question. And that goes back to, what's the value proposition? What right do you have to be the operating system for my financial services, right? Like, you have to really have a really good reason that I'm going to use your card as my primary card.
All right, so let's go there, because I wanted to talk about that next, which is, what is the right to win here, right? So just as a little bit of context, 3,000 cards in the market. we now have the infrastructure for anyone to launch cards much more easily, right? And this is, I think, a big change from where we were. If you remember the old co-brand days, there was such a cost to stand up a program that only large retailers or large brands would do it. And the level of customization, even available to those large brands, was pretty limited, right? And so it was mostly a game played around scale, around rewards, and there's a pretty limited field of competition. Now, from an infrastructure perspective, thanks to folks like Marqeta, we have a much broader field of competition. But again, as you were saying, 3,000 cards, it's already hard to distinguish between all of them. Not everyone has a right to win. So Todd, I want to go back to you on this. What defines having a right to win in this particular space?
Yeah, think about the cards in your own life that you use, right? You've probably used them for 25 years. And the reality is you're not going to use 7 cards, right? Like the idea that someone's going to remember every
Speak for
reward
yourself.
For every card. Well, you're a very rare bird.
Long live Wallaby, I say.
Like this, but they're not the majority, right? The majority of people are not optimizing for every reward on every card, right? That's a small group of people that are very, very clever in maximizing their rewards. However, most people want to use one card all of the time to maximize their benefits that they're getting on that single card. And so the real question I think here is, why do you have the right to be that card? And the answer generally goes back to frequency of use, or breadth of rewards. And when I think about the cards in my life, stack rank for yourself. Where do you spend most of your money? And if you ask yourself questions like, is that Amazon? Is that Uber? Is that Instacart? They might have the right to be the operating system for your financial services.
Yeah.
But, if you're like, think of it as a specialty retailer where you go in maybe once a year, that company may have great brand affinity. You love that brand. You go there because you love it. But do they have the right to be your credit card? Probably not.
Yeah, I think that's fair. Matthew, what do you want to add?
Yeah, I agree that the days of the mall retailer owning share of wallet, they're very challenged. I think we did a lot of research on this at Wallaby, and there's like a barbell effect in cards, right? So if you ask the Fed, they say the average American has 3.5 credit cards. The reality is there's a whole bunch of people with 1 or 2 and a whole bunch of people with 5 to 7, and they're very different people, right?
Yeah,
and it goes credit cards are not a monolithic product. And so if you're thinking about the reward structure, people are willing to have a few. And I completely agree with Todd. It's about where do you spend your money? And then it comes down to what is that reward or loyalty system going to get for you, right? So if you're taking Uber all the time, to use the example, then Uber Cash is extremely valuable and you want to collect as much of it as possible. If, on the other hand, your dream is to take a first-class flight to Tahiti, then some kind of, airline points are going to be extremely valuable. And those things can change over time, but I think because there's so many rich rewards, and as Todd touched on, the economics are limited. Like everyone gets the same interchange, so you can't really beat that. That it comes down to, can I create a relationship with my user where they want some amazing experience, reward, outcome? Because the points are in service of something. They're not the end game. Unless you're me, then they're the end game. You just like to collect them.
I was going to say, there's maybe a smaller even subset on one end of that barbell. My friend Kia Hazlitt that I do a podcast with, she has a system where I think she has 18 or 20 cards and she keeps track of all the rewards in a spreadsheet. Those people do exist. They're with you.
I have 27 right now. And there are new apps. I use Kudos to keep track of my rewards. So a little plug for Kudos, but I get it. I'm really not normal.
He acknowledges that, he's not normal. But no, I think that's right. I think the other thing that I would just add to that is, given these dynamics, there is this hard push and pull where it's you don't have an obvious right to win. Rewards at the scale that large issuers play that game is very difficult, right? Not everyone can say, I'm going to build 5 new airport lounges next year, right? There's a resource challenge here too. But I also think that, and I sometimes think about Built in this context a little bit. And, Built, there's elements of luck and great execution as with any startup. But this idea of we are going to build a card for renters because we think that most people who work at banks own homes and don't really understand the life of someone who rents and maybe who's young and has sort of maybe moved on from the idea of ever owning a home. There needs to be a card and an ecosystem and a loyalty platform for that. That's compelling, right? And that idea was just sort of sitting there waiting for someone to build a business around it. So even in this crowded market, even when not everyone has a right to win, there are these new opportunities that emerge.
The other thing I think is really interesting, like I've often said that the 2010s were the age of debit card innovation, and this decade I think is the credit card innovation age, is the ability to deeply embed the experience. Like the traditional model is, I'm American Airlines, and you can go to Citibank and log in, and you can go to American Airlines and log in, and like never shall the two things meet except once a month when a batch file tells you how many miles you got, versus a modern experience where, you could log into Instacart and manage your credit card from your Instacart account, and you could have this unified experience. I think that goes a long way towards winning consumers into something simpler and more powerful.
Well, and I wanted to ask about that because I think as there's this focus on profitability in fintech, we're going to see more fintech companies going to credit cards. We've already seen that. Embedded finance continues to take off. Credit cards are a great use case for embedded finance. So we're adding more cards to the 3,000 that we already have. One question, though, that I have is beyond the application experience, beyond the sort of upfront underwriting, what are some of the downstream implications of credit card becoming even more competitive, right? And I think about things like loan servicing, collections, partner banking, even like private credit and getting access to debt facilities. All of those are sort of the less sexy parts of building a credit card business, but there's a reason why credit cards are way harder to do than debit cards, and it has a lot to do with those back office functions. What do you think the impact of sort of a growing interest in this next decade of innovation being around credit card? What are the downstream impacts of that? Matthew, maybe you want to go first.
Yeah, I mean, I think that they are a lot harder. They're a lot more expensive. Even though it's cheaper, faster, easier than ever before to build a credit card, it is still not actually cheap, fast, or easy. And so you do have a lot more regulation, a lot more ways to get yourself in trouble. Like people, come up with crazy underwriting that's actually illegal or whatever is going on.
Yeah, they do.
And then I think these things like disputes, or I spent a bunch of time with someone yesterday, and they were like, well, we're interested in a card program, but we're very concerned about what happens when we have a false decline when someone's traveling overseas. And I was like, wow. But they're like, thinking about how does this impact my brand? People have these very high expectations on how cards should work. And that makes it really, really challenging. And to your other point about lending, this is the biggest blocker right now, right? Is that people are not only subscale compared to Chase or Amex, but they have this fundamental profitability problem that they're not banks most of the time, and they cannot access bank capital, and that's nice and inexpensive. And if your warehouse is like SOFR plus 6, you're in trouble from day one.
Yeah, no, I think, there are some structural disadvantages. Todd, what would you add to that?
Yeah, look, everything you said is 100% correct, right? Like in the end, you said this, the economics have not changed that much. In the end, we all live off the interchange. So the model that has to change is either the cost of funds on the back end, which isn't changing. So I don't think you're going to see this explosion of people who can just provide credit. It costs a lot of money to do it well. You have to be well capitalized. You have to be willing to build a risk and compliance team. So it's not something that just anybody can do. It's not like technology can just come in and disrupt. The infrastructure still needs to be there and the cost in order to support it. So you won't see hundreds of players. But I do think what you will say is what Matthew was talking about, is the real innovation is in the embedding of the experience and taking that away from this idea that your credit card is something that sits off to the side. And all of the data and information is you have to go to that place in order to get it. The real innovation and the real value to consumers will be in how you integrate those experiences into the things they do, whether it's how they work, whether it's how they run their family. All of those things is where the true innovation will be. And so from my perspective, you will see lots of innovation outside of the banks, but it will be from very few companies because the cost of doing it is still very high.
And I think that data part is also really relevant for the brands, right? Because when I talk to brands about building a credit card, I'm like, there's 6 reasons to do it. And number 6 is to make money, right? Like everything else is actually more important. It's data, it's loyalty, it's, marketing channels, and those disintegrated experiences do not serve that very well, but that's all they've had over the last 30, 40 years.
Yeah, the idea of a standalone card that's going to be profitable is very unlikely. Right? It's really a tool or an asset to a company to deepen the loyalty and the relationship they have with that customer. And if you think about it really, really carefully and you design the experience properly, it's not, it needs to be less about the rewards going forward and more about what is it that I get that makes my life easier.
Yeah, I mean, I think just to add a +1 on that, the idea of embedded finance, where finance can be a major component of your business model, I think is very, very dangerous. One of the things I've found with embedded finance and the brands that get into it is the CFO works in like a real business where they have to manufacture widgets and they have a very tight margin and they get used to the discipline of operating that business. And then they see like interchange revenue appear and they're like, this is magical. There's no like cost to manufacture it. Like the money just comes in. Are you telling me we just get paid and the customer doesn't even know they're paying us? This is incredible. And the problem is it's addictive revenue. Like you can get addicted to it. And, General Electric kind of blew up in the 80s because they became a financial services conglomerate, not a company that manufactures actual real world products. So I think I constantly caution businesses around is when you're getting into finance, take it exactly the way you said, which is the money is kind of the least attractive part. It's building that integrated experience. And I want to ask a follow-up question on that, which is, in the report that Marqeta published, there was this sort of clear sense that came out of all the answers, which was consumers tend to value the convenience of the experience and how they use the product more than like the specific funding or payment or credit instrument. It's that sort of integrated experience. So we've talked about embedded, obviously like virtual cards are a big component of this, digital wallets. But when you think about the changing nature of credit cards as like a product form and it becoming more convenient, what stands out as like interesting innovation in that way? And Matthew, maybe you want to go first on this.
Yeah, well, I'll pick on Apple and Goldman.
This is the week to do it.
They just got in trouble, right?
Yeah.
But I think that really showed us you can build a card in a different way, and you can. Look, there's things they did that are unnecessary. The whole like let's bill everyone on the first of the month thing is like an unnecessary trick. But having the card show you your spend on the homepage, right? Having you understand how to pay things down, making it very easy to load into wallets, which obviously Apple has an advantage there. But this idea of like just getting started, it's a huge difference from where we were 10 years ago, where you had to wait 10 to 14 days for your physical plastic to show up in the mail. And now you can get it instantly delivered the moment you apply. There's some fraud problems there. Don't unlock the whole credit limit right then. But it's really made it a much more interactive experience. And I think when you're looking at brands or other folks who have like in-person experiences, they can delivering cards, that's really powerful, right? Like, can you stand at the checkout counter or at, the hotel front desk, apply on your phone, get the card delivered and pay for your experience right then and there? That creates that stickiness, right? That, I use this card to save money on this purchase right here. That used to be, if you remember, like getting a Macy's card, it was like, well, you're going to stand there and fill out the whole thing on a piece of paper and hand it to them. And it was terrible.
Well, and quite frankly, like, I don't want to stop the line of people behind me. Like, do you want this card? It's like, not if the people behind me are going to yell on Black Friday. I don't. Todd, what would you add to that?
I always feel bad for the flight attendants when they walk down the aisle and they have to sell the credit cards. Like, I really wish that didn't have to happen.
It feels really bad. I almost want to say yes, just to help them.
Why are you being forced to sell this credit? Anyway,
totally.
Nobody wants it. Someone always takes it just to be kind. But
Yeah.
For me, what I always think is interesting is these cards, like the innovation is around things like the bin type, like Flex, right? Like Visa Flex is really interesting.
Yeah.
Now, what it opens up is still up for debate, right?
Yep.
We're in the early innings of, hey, I can have a debit card attached to a BNPL product and a single card. And when I go to the point of sale, I can make a decision right then and there. Do I want to break this up into installments or do I want to pay out of my existing funds?
Yeah.
I mean, that doesn't sound like a massive innovation, but for someone who's living paycheck to paycheck, who needs to buy something and they don't have the money, the ability to say, okay, break this up into installments and get this now and take care of whatever I need, that's potentially changing their life.
Yeah.
These are things that, not everybody in this room maybe feels, but these are very, very real innovations that are powerful for a vast majority of Americans. So, and others globally, obviously. So for me, the real innovation comes from you get these tools, you get these types of things that technology enables, and then people build on top of it. It's just early days to deciding what are the next iterations of what's going to come.
Yeah. Matthew, you looked like you had something you wanted to add.
Well, I was thinking about, this paying for, everyone's got a name for it, right? Amex, Chase, everyone's got a name. And it's funny because I think don't quote me on this, but 10 plus years ago, Chase invested $100 million in building kind of like a installment payment thing. And then like nobody used it.
Right. That's right.
And then a firm came out and like created this understanding of it. And now it's very, very popular, which always speaks to the timing of things. But I do think one of the biggest challenges credit cards always had was people don't understand interest calculations. That's just true. They're never going to. No one actually knows what an APR really is or how it works.
Yep.
And so this idea that like you understand you have to pay some financing costs, but it's fixed and it's knowable and it's not going to get out of control is a super powerful innovation for consumers to want to come into the credit card space. And I love the flexibility of, like you said, you could maybe with Flex pick the point of sale, or you can get a text or an app notification immediately after a purchase being like, hey, do you want to split this up? Right? I get those all the time. And it's very clever and it gives people the flexibility they want.
Yeah, absolutely. James or Todd, anything to add?
No, as I said, for me, the innovation comes in terms of what you build on top of what the networks will give you, what technology will give you, et cetera. And I think we are in very early innings. Someone asked me yesterday, how does a Flex card work? And I said, oh, well, you could manually toggle in the app.
Sure.
And someone said, well, do you really think that a user is going to go into their app and toggle back and forth between their card? And I said, I think that's a really fair question.
Yeah.
I don't know the answer to that yet because there's not a single product in market today being swiped. So I don't know what the user behavior will be.
Yeah.
But we'll learn. And that's kind of the point. It'll take time for these things to evolve. But I do think there's tons of opportunity when you think about the option to have revolving against a debit card, right? Like all in a single product.
Yeah.
Or two different types of revolving, one commercial card and your business card is attached to your personal account. I'm not saying these are things that are going to take off, but they certainly open up a world of innovation that did not exist 6 months ago.
Yeah, the optionality to build these new things is really exciting. And to your point, it is still very early innings. I think that's a great place to leave it. Please join me in thanking our wonderful speakers.
Thank you.
Thank you.
Awesome. Well, as always, we do have a couple extra minutes. So if there's any questions that you guys have for Matthew or Todd, they're the experts. So happy to humor any questions. It's a small group, so.
If you were to play futurist and go 10 years out, what's your predictions?
Can you narrow it down though?
I'd like to see the Giants win the Super Bowl. That'd be great.
Well, that's not going to happen. No.
That'd be good.
I think that I do think there's gonna be a lot more credit card products. I think a lot of the same trends we see, I think we're going to continue to see small FIs consolidate, and actually maybe the total number of products will shrink, but we'll see brands come in a much bigger way, much more embedded experiences. I also think that there's an opportunity for larger FIs to get into the embedded finance space in a way they're not today. Debit is fundamentally constrained by the Durbin Amendment, and it creates this weird thing where tiny banks have to do these big things, which is not how the industry worked when I got into it. We worked with big old banks like Citi and GE and whatever to issue debit cards. You can't do that, but they can issue credit cards. They have no regulatory limits on the interchange there. So that solves that capital problem and can maybe give them an option to do things they wouldn't do otherwise, right? We know that Barclaycard or Chase or whatever doesn't want to service a million user brand. It's too small for them, which sounds absurd sometimes to startup people like me. But, could you work with a company like Marqeta, and a bigger bank with the capital to make all the pieces work, where you can provide a highly customized card? So I really believe in mass customization. People don't want to buy the same thing off the shelf. They can buy whatever they want on Amazon, join any group on Facebook, watch anything on Netflix. They want the same thing from their financial services ultimately.
Yeah, I don't know what the future will hold, but I am a big believer that the brands will be in front and the banks will be in back for credit. And specifically what I mean by that is I think it's very hard to see a world today, if you are a brand, where you are responsible for your credit card program, meaning you take the losses, you are the balance sheet for the program, you are the one driving the rewards, driving the marketing. There are very, very innovative brands that see the world that way today, and they want to own that experience. And so you're starting to see brands take control. I think 10 years down the line, that is the norm. And I think it will take companies like a Walmart buying a neobank and saying, we are going to be the bank for all of our customers. We are going to do it for our employees. We're going to offer them rewards and services that no bank would ever offer us, and we're going to be in control. When others see them doing that, the likelihood that it will happen increases. So in my mind, it's going to take time. There is big risk. There are still questions about regulation, compliance, risk, how you manage all that. But I do believe that that's where we're headed, because the brands, this has always been true, are better at consumer experience and direct-to-consumer relationships than banks are. To me, it's an inevitability.
Yeah, I agree with that. I think the only other thing I would add is just that there are these things that don't happen, but seem inevitable, right? And generally, the way I think about that in financial services is if technology can enable it, and if it's good for consumers, it will happen eventually, right? And on the credit card side, the example I think of is digital wallets and this sort of Wallaby vision of being able to have the best possible instrument of payment used in an optimized fashion at the point of sale in real time. That's what benefits consumers, right? That stuff living at a wallet level and having it be fully optimized and intelligent, and you not having to think about it or manage it or have a spreadsheet with 28 cards that you think about constantly. That's what everybody would want. That's ideal. Obviously, it's challenging for issuers. It's challenging for networks. Like, it creates a whole set of competitive issues. But if it's good for consumers and technology can enable it, which we're getting closer to with wallets and with open banking and with AI, which we haven't really talked about that much, I think eventually it will happen. And so I have absolutely no ability to predict timelines. I get that stuff wrong constantly, but it seems inevitable to me that that type of fully optimized real-time payment routing solution, which smart folks have been trying to build for years, it will eventually exist because it's kind of one of those inevitable things. Hopefully that helps. Any other questions before we log off? Yeah.
My question was in regards to the 27 cards you have. How do you rationalize that? How do you manage it? Do you carry them all in your wallet, a digital wallet? Like, what's your everyday use of the 27 cards?
Yeah, I don't carry them all. I also have a collection of plastics that is several hundred right now.
It's true. I've seen pictures of this.
If anyone has interesting plastics they want to hand over to me, I promise not to try using your card number. I don't rationalize it. It's an addiction. I tell myself there's a good reason to get this card, and then I get it, and then I'm like, I should cancel that in a year, and then I just don't. And then I'm like, well, this one time it got me an extra 3 points, and so that was great. And I love earning. I don't know. The game is what appeals to me. I'm actually very bad at spending my points. I usually have very large balances because I'm like really focused on out earning everyone. But I'm so susceptible. I kid you not, on Sunday, I got an email from Amex offering me 250,000 points if I upgraded my business card to platinum. And you better believe I am upgrading my business card to platinum. Also, something's wrong with their pricing algorithm. They should not have offered that to me.
It's amazing. Yeah, you should call them up and be like, I took advantage of this, but you should really stop this immediately after that happened.
So I do use, I carry there's 12 in my digital wallet. I carry 8. I use Kudos, which is Wallaby 2.0, and big fan and investor in the company, to tell me what to use, because it is very, very hard to keep track of, and especially with the rotating categories and all that kind of stuff. But one of the things we always want to do with Wallaby, I think, to Alex's point, it's not just rewards hackers. We had cash flow optimization, interest rate minimization, right? If you're about to walk into Best Buy tomorrow and buy a TV and your statement closes tomorrow versus in 30 days, that's a meaningful difference for a regular consumer, and they can't keep track of that stuff. So I'm really excited about the Apple Wallet API opening that's happening.
Yeah, that's a big one.
Someone should be building this finally. And I think in 10 years, back to that one, we probably won't carry physical cards, although we'll still call them credit cards, but they'll be all digital.
Yeah, I think about that future where my kids, I have a 6-year-old who's my oldest child, we're going to call it a card, and someday he's going to ask me why we call it a card, and then I'll pull out one. I have a big collection of plastics in a drawer somewhere too. I'll pull one out and show him, and it'll be like, this feels like touching the past. So no, it'll be that experience. All right, we're going to gavel it off there. Thank you so much, guys. This was really fun.
Thank you.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.